Hey everybody, and welcome back. In today's video, we talk about the stock, crypto, and commodities markets right now, including the key levels that you need to be watching over the next 24 hours into the next few weeks. We saw the gap close, and this is a very important thing that's occurred on the markets, but it's only closed on the S&P 500. It certainly hasn't on the Nasdaq. What really looms though is a certain formation that, if it does occur, will be very negative towards the markets. A lot at stake here for Friday. We've got to talk about options, technical analysis, and much, much more. See you soon. This will be a great one. Well, welcome back everybody to our daily show talking about the close of the markets and what we expect to happen next. This is obviously for the 7th of April, 2022. And if you like stocks, cryptos, or commodities, remember to subscribe and smash that like button if you find value in today's video. So it was all about really defensive stocks again, even though we stabilized in technology and other things. And it was healthcare's time to shine. A very strong sector, healthcare, and theoretically bio as well during the month of April. And some members of the community were grabbing flags on Pfizer. And I've got to say congratulations to them. Big shout out, because that was a phenomenal technical setup that they found. So congrats to them. Let's talk now about what happened through the market though. And that was a sell-off during the first half of the session into a revival rally, filling the gap on the S&P 500 and closing the indices at a very pivotal point, holding the supports. The first time in a few days now that we've seen any bullishness come out of the broader market. Let's now talk about what's been happening though in terms of sectors, and this is where things get a little bit more interesting. So it was a mixture: metals and mining, healthcare, gold, staples, bio, and even some of the general kind of defensive and risk on kind of stocks were doing well. Now, I have a question for everyone. Do you know what are the 3 best performing sectors of this year? If you do, pause the video, put the comments down below, because it may surprise some people. And I think I just want to get into everyone's minds that we are in a different type of market environment to what most people are used to in 2020 and 2021, and possibly even 2019-18. We're in an environment that is targeting inflation stocks and targeting defensives. And this becomes very clear when you understand that energy, metals and mining, and gold has actually been the 3 top performing sectors. Most people won't know gold. I'm pretty sure you get that one wrong. But yeah, they're the top 3, and utilities and consumer staples have actually well outperformed the market as well this year. Even Jets has. So this is surprising to some people and obviously not to others. What I guess I'm getting at is we are in some kind of weird defensive natured market. Value is holding firm, and that is also going through to commodities as well. 2 things that tend to form very, very well during stagflation and inflationary periods. And we know we are in an inflationary period. So the market is obviously adjusted accordingly, yet the S&P 500 has really not moved a huge amount considering the massive changeover of stocks that has been occurring. Let's now talk about back to normal. So are valuations back to normal? Well, they're certainly better than they used to be in terms of the world index here. And you'll notice that all of that kind of big froth that's come off the market since the 2020 boom has now come back to a more stable area where it was at the peaks. Now, does this mean it's cheap? No, the market's not cheap, and we know that, but it certainly is back to a more realistic level and less euphoria in terms of the overall valuations on stocks. And again, we're all aware of this. We can see it in price. Another thing that I want to just thank the community for, again, Ian, good work here on your gap analysis. Obviously, this has got to do with up gaps, but even down gaps. We saw a big statistical here. Fact that really markets were tending to flow through to filling that gap within the first 1 to kind of 3 to 4 days. And again, that is what has occurred. We've now filled that gap on the S&P 500. Let's talk about April. So April started pretty rocky here. A lot of people are losing faith in the seasonal, and I don't blame you in some ways. Obviously, seasonal and all of these studies, they come along with your technical analysis, with your overall, is the momentum in that area? And if it is, and you see the momentum, you gain more confidence to hold the position potentially for a longer period of time. So we know the first couple of trade days for April are not good. They're up, down, and all around, traditionally anyway. We also know that if we're going with the standard kind of midterm year here, that we tend to have that sideways action into potentially some rally for April, and then May, you know, historically, or the back end of April, just very bad for the markets. Has that sell-off come early? That's a question we're going to need to ask ourselves, especially after the Friday close. So let's now get into the technical analysis. First up, we'll talk about yields. Look, they've dropped a little bit, but still incredibly high here. Obviously, the market and inflation and the Fed and everything, it's all a big problem. We know it is. And at some point, it will probably manifest itself into price even more so than it already has. But we don't know that that's occurring just yet. Let's talk about the VIX. So this is where things get a little bit interesting. Bears tried to push it up, so as in the market was coming off. Then by the end of the day, it rallied and then sell straight back off. So this basically means, do we have a tweezer here on the VIX? If the market continues to rally, which will be an important factor we'll look at soon when we look at the indices, and this breaks through, could the VIX actually be going back down to its lows here or even lower while the market starts to tend towards a bullish April? This isn't strong here for the VIX in terms of what the bears are looking at. That's actually a bit of a bearish thing if you believe in technicals on the VIX. And if the bears do end up getting through and pushing the market back down on Friday and the VIX breaks through here, wow, that's going to be an explosive move. So at this stage, I would say maybe in favor of the bulls more than the bears in terms of the VIX analysis. Where it becomes more in favor of the bears is the movement or the flight to safety. Remember, the US dollar is the currency of choice for people that have uncertainty and they don't know where to go. It's a hedge against uncertainty and obviously a liquid one. And we have seen a breakout of the distribution that's turned into accumulation. And that's now strengthening here. So currency traders looking at a strong dollar for now in terms of DXY and pairing other, of course, currencies against that. Let's move over to gold. So again, gold, sometimes seen as a currency, a hedge against uncertainty as well. That is currently in decline. So we've trapped it very well here, I think, as a community. We've got our key support sitting around 1900. We've got another key support sitting around 1915. And as we suspected, we've got a series currently of lower peaks, that is lower highs here. And if these lower highs are taken out, all of a sudden maybe gold becomes a lot more palatable towards the bulls. So certainly right on one of the critical zones, whether it's 1915 or this downward trend. Remember, if you believe this is a downward triangle here, descending, if it breaks out to the bull side, the bull break, just like the bear break, are both very strong. In fact, in my trading history, I've usually found that the break that goes against what most people technically think of, that is the bull break in this case, tends to be a stronger pattern that has a better follow-on effect than the theoretical way it should go, which is down. Something to be thinking about and of course focused on here for gold. Daily, not really too much to go off except for it's putting pressure on that previous long leg doji, but again needs to break through all of these moving averages, etc. Natural gas right at the peak here in terms of where its resistance is. We talked about this level. It created a shooting star or pin bar rejection. Now remember, with pin bar rejections, really it means nothing unless you get a follow through. And that's kind of like the story of this week's S&P 500 we'll look at soon. There's no follow through. It's sitting on the level and we're waiting for, some information. Natural gas still looks very strong. This could be consolidation. And if it does breach out and get another strong day for it, a pullback back to this zone may issue some very large strength in the natural gas. It is quite far away from the 20 moving average. And I think that's something we need to remember. At a resistance far away from the mean reversion, that's where you start to say, well, are we consolidating here on natural gas? Everybody's talking about it right now though. US oil continues to weaken. The community's been correct on this one. We really did call it together. The market declined. We called the rally and we also called where the weakness would occur. So well done to you guys. It's back down around support. If you're feeling bullish on oil, this is one of the levels that, of course, people will be looking at, but I don't think things are as clear on oil at this stage. We'll come back to that next week. Let's now get into some stocks. So we'll begin with Tesla. Well, it's finished the gap. The gap has finished. It's found support here around 1,020, and that's not too bad, getting close to that 20 moving average now. And it created the dreaded long leg doji. That is indecision. It actually has no idea what it wants to do. We've got a high, we've got a low, we've got an open, and we've got a close. There are some good things though for day traders to be looking at for the next couple of sessions, and those are these. We have a support that's pretty clear around that 1,020-25 level. We also have a previous point of resistance or support here becoming resistance. And if we breach through that level, what happens? We've created a little double bottom in the direction of the overall trend. Is that a fairly strong sign for bulls? I think so. So if we get through this level and close above here on a smaller time frame, 15 minute, 1 hour, whatever, then that should trigger some buyers through the Friday session. I think this is the story really here of what market participants are looking for. There's a lot at stake on the previous day, Thursday, and the Friday close. At the moment, lots of indecision on this stock, lots of indecision on most stocks. That little double bottom could hold the key. For bears, you just want to get through those last lows. And then of course, maybe the next stop for Tesla actually is 950 if you break through that support there. Apple, long leg doji, followed by another indecision candle. We have a high and we have lows. We're obviously looking for a closure either way, above or below, to show us some strength. Remember, this is a bit of a barometer on the big market participants. And of course, Apple, it doesn't get any bigger than that currently in these markets. It's a big one. Indecision, we've got a high and a low. Let's now take a look at the DAX. So the DAX is the European market of choice at the moment for us to see risk on, risk off in terms of what's going on in Europe. It's a bit of a weaker market because it has a giant Wyckoff distribution on it. And that Wyckoff has been playing out and showing weakness. For market participants for Friday, this is a very important day. We have where the bulls came back in, which we expected, around the 14,000, previous resistances become, of course, support. It rallied to the exact same point that we thought it would. Previous support becomes resistance, and then it sold straight back off. It actually wasn't that hard a trading day on the DAX. But where it gets interesting now is, do we close bearish or do we close bullish for the week? There's a lot at stake here, I feel, because if we think about it, the weekly will be hard if this occurs. Here's the distribution. Here's the rally back to the previous support, becoming resistance at the 2 moving averages. And then, of course, we get the shooting star or the pin bar candle, as many people know it as. This candle, followed by another bearish candle, is not so great. So we kind of need a rally here for market participants to be feeling very bullish in the month of April. And we haven't seen it yet, but everything can change in the next 24 hours, as we know. XLY is kind of similar, found buying pressure at the exact area of previous resistance support, went a little bit lower, possibly catching a few traders off guard that didn't have, bigger stops. Holding maybe the 50 fib would have been a good stop here. And then we see it go back to the high, no gap fill here on consumer discretionary. So that means that the risk on sentiment of the market is still quite low, but of course a breakthrough of this high, then we move towards the gap fill. Something to be watching in the Friday session, we feel, in terms of the technicals. Let's move over to IWM. So IWM, the 2000 small cap, again, a bit of an idea of the market health and how it's working. Yeah, look, it doesn't look great here onto the Friday. I don't think there's too much technical really we can look at here in terms of strength or weakness. So we'll come back to that one, but certainly not doing so well. It hit the 20 and the 50 exponential moving averages and it sold off that zone, and it's indecisive. So that's really all we can get from that one. Let's go over to the big kahunas. We'll talk about the Nasdaq first, and we'll talk about what's going on here. We've got some options to discuss here as well. So the Nasdaq came down. So if we take the actual fib of the whole thing and get a retracement here, you'll notice it goes to the 38.2 fib, hits the daily the 2 hour 200 here, and just slightly bounces off. Again, potentially taking out some stop losses there through the day session. All sorts of weird candles, and then we get back to this point of resistance. I mean, you'd be hard pressed not to have that on your charts for the Friday, because of course a bullish breakout here, where does it move towards? Filling the gap. And that's not too bad. There's a bit of percentage there if it does get through. This is a very interesting market at the moment because there's so much at stake. Let's take a look at the weekly. Again, the weekly, absolutely horrid if it does close down. Many people will know that, especially on the S&P 500, these types of patterns can be called evening stars if they do end up going bearish. And the S&P has a great example of it if it occurs. You've got the bullish candle. It's a three candle pattern. Usually works pretty well. The bearish candle, and then, of course, the bearish candle possibility. If we end up rallying on Friday, everything changes. If we don't, it's starting to look a little bit shaky indeed for the month of April. Has the sell-off begun earlier than we expected? S&P 500, here it again is. So there's the weekly. Again, the evening star pattern. If it goes underneath, that's going to be very bearish. So Friday, a lot at stake. But the daily did look a little bit better here in the broad market. And that's thanks to the defensive sectors, things like healthcare, etc., doing better than expected. It filled the gap. Fantastic. But on top of that, we also have 2 buy zones off that 44.50, which is our key level of support. Remember, after that, there's only 4,400 left. And if we get down to these levels, all of a sudden you're talking about probably, at least this week, creating some kind of evening star pattern. Not really fantastic for the markets. What bulls will be looking for is that 45.20. 45.20 plus closure on the smaller time frames. That's going to be very bullish, and of course a big win for the bulls through the Friday session. But let's have a look at what the options are telling us about the market. So first up, Max Pain. Max Pain's moved down for the maturity here to 450. It was 452. That means that if the market is going to extract maximum value from all the options that are open at the moment, it would close at 450. So 4,500 on the main index. This is always interesting because it's really just based around greed of Wall Street. If they can get the best possible price, why wouldn't they take it? Last week, they got it to the absolute perfect point. It doesn't mean it's always going to happen, but it's right around that price at this stage, as we know. Let's have a look at the open interest. So this is the open interest as it stands over the last day of trade. Way more puts, as you can see, being placed, and quite a lot of calls right at the money and a little bit higher. The overwhelming amount of puts, though, at the 450 and below could still hold it up. This is what we call like a put wall, effectively a wall that the market doesn't want to go through. Generally, you don't want to see the market go too much higher either on the calls. And as we know, their perfect scenario would be 450. And possibly by the end of the day, who knows, could be 452. We don't know where it's going to be because there'll be more options opened. If we compare that with the day before, which we had on this channel, you'll notice a lot of people place short dated puts all over these prices here. And that was the story, I guess, of the Thursday. People, especially maybe retail, was convinced the market was going down and they started placing short-dated options. Short-dated options tend to be more retail than Wall Street and bigger players. They tend to go for a little bit longer. So interesting closures here, and we'll be looking at this next week as well and on the weekend video to really get an idea of the week ahead, leaning into one of the traditionally strong weeks going into Good Friday and Easter. So some interesting stuff here on the charts and a big smattering of puts and calls coming in for the Friday session. Let's now move over to a few other things. We'll talk about Bitcoin to start off here. And Bitcoin, risk on, risk off, that's what it is as an asset class. It created a really puny little doji down here. If you're looking at Bitcoin, this is really very important to hold up. We don't want it to get underneath here. We had that initial rally that came off the 44. It rallied. It never made the new high after 48. And unfortunately, we couldn't go to 52 because that was our aim. If we broke through here, 52 is the next level. Right here, we've got a long leg doji. If we go above the long leg doji, then we've made a decision and hopefully then we can start to rally. I think a lot of Bitcoin success here is actually going to be based on the stock market rallying as well, because if it doesn't rally, then it starts to short off. Because Bitcoin is kind of a risk on, risk off asset at the moment, it could go down further. BTC shorts have risen as well for 2 days now. So that means that the nasty whales are getting involved in this market. They're pushing it down in terms of they're going against you on the shorts. Now, it's not a drastic alarming level yet, but still it has risen for a few days here. Ethereum back on support, just like Bitcoin, and it's now or never. These markets have to start to move towards the risk on, you would think, over the next couple of days. Otherwise, we'll have problems. If you haven't already, follow us over on Twitter at FX Evolution. We always thank you for following us on the support, the socials, all those types of things. Definitely check out our Discord community. Some of the people in there have been giving away some amazing knowledge they've learned over the last couple of years of following us and obviously working on their own systems. So that's great. And there's a lot of like-minded individuals in there, which I think is important when you're talking about trading really trading communities. Sometimes if everyone's hyped on these stocks and they kind of ruin your mentality, if you know what I'm saying. But this community is generally on board with the same kind of concepts, and there's a lot of people growing and learning all the time. And that's very important to me and very important, I believe, to trading success. Thank you very much for watching. If you have enjoyed, please subscribe, smash that like button. We'll see you in the next one. Bye for now.